Hello, this is Team7, and we're here to talk about the company Accenture that we have selected for our second assignment. Our presentation consists of 7 parts: team contract, introduction, and the 5 tasks. This is the team contract, and let's move on to the introduction. Accenture is a talent and innovation professional service provider, and it's really recognized globally. Its objective is to reinvent, enhance, and accelerate their clients' business growth, and the target market is divided into North America, Europe, and other developing regions. Their opportunities lies in how they can bring together experts, their service team, and their specialist team. They also have local market knowledge and experience to help their clients. About AI is essentially programmed machines that can do whatever human intellect can, but they do it efficiently, locally, and creatively. They're divided into four main types: reactive, which can be illustrated by IBM's Deep Blue; limited memory, which can be illustrated by ChatGPT; and the last two, theory of mind and self aware, are still under development. We also have a figure of AI investment globally from Statista. You can see here that it's an ongoing trend that Accenture is also a part of.
I'm Hua, and I will talk about theoretically analysis of literature. First of all, it's about R&D and revenue. Theoretically, AI create opportunities for company to grow, and AI will help business to enhance their revenue 3.5 times faster. And it can also be energy efficient at the same time. I will take IBM company is the example of this context. However, if the adoption of AI is lower than 25%, we cannot guarantee that the growth of business is clear. The revenue growth is not clear, so we won't see any significant rise in the revenue. Compare the real world context to the theory, there are some similarities. First of all, is Accenture has successfully adopted AI and their profit has increased. However, the percentage of increased profit compared to the previous year it's not big. Accenture have many technology capabilities so that when adopt AI, it can create controversy and business structure can be affected. Therefore, the revenue experienced low percentage growth in early stage of adopting AI. Moreover, uncertainties and legal issues might occur due to this event, and it can also affect the revenue.
According to this theory, AI will increase the operational efficiency and productivity. As they can handle repetitive tasks, we can reduce time with for employees so they can focus more on strategic tasks. And however, companies have to focus on R&D behavior as is may cause uncertainties for the company. And the real-world situation closely reflects the theoretical behavior. In 2023, significant investments were made such as workforce training or new program development, leading to higher R&D expenses. But in 2024, improved operational efficiency and the reuse of AI models and the integration of AI-driven tools that reduce the need for continual large-scale investment, leading to lower R&D expenses.
Let's move on to the next part. Over here, I've collected data on R&D spending, revenue, operating expenses, and net income over the spans of 15 years. Let's move to the R&D, which is our proxy for AI automation metrics. Here we can see the median is lower than the mean, and the skewness is leaning to the right, indicating that the company has been making major investments, and the major investments are from 2021 onwards. Um, the standard deviation is smaller than the range, and it shows that despite having some outliers, such as the early years or the recent years where they are really amping up investment, most of the time they're very stable. They're increasing little and little over the years, and they do not have any like random investments. The largest value in 2023 coincides with their plan to amp up their AI game. They have been establishing a new AI center and also a big plan of $3 billion over the span of 3 years. The other values have the same trend. You can see here again the median being lower than the mean. There are high values from 2021 onwards, and standard deviation being less than the range. The values having some outliers that start in the end of it, and also that the range is quite high. This indicates that the company has been scaling up really steadily. There are no big disruptions. There aren't any big changes that they have been made with any of the revenue, operating expenses, net income, or R&D.
Now we will turn into task 3, which is data visualization. So in the first step, we have analyzed and evaluated the R&D visualization. So after many deeper research, we have divided the chart into two separate time periods. The first one is cloud-based system development, and the second one is AI evolution. So we evaluated the first anomaly in the year 2013. So in these periods, Accenture would like to invest in R&D to catch up with technology shift, which is cloud-based system development. In the second time period, especially in 2017, Accenture stepped into the AI field. That is the reason why in the 2017 the R&D component had have started increasing. And in this time period, we also believe that in 2020, the COVID-19 pandemic also affected the R&D. And the second anomaly is 2023, Accenture have officially announced to invest $3 billion for AI development. Turning to the visualization of R&D and revenue. So the relationship between R&D and revenue is not always directly proportional, and it is evident that in some time periods, R&D witnessed a decrease, however, revenue still increased. So to explain this, we believe that Accenture might turn their focus on another sectors, for example, targeted innovation or process efficiency. Turning to the visualization of R&D and operating expenses. So in the first time periods, and to be more specific, in 2013, R&D exhibit strong growth while operating expenses experience a slight increase, which is the first anomaly. So to explain this, we divide it into two separate situations. The first one is Accenture had to eliminate it and to reduce pressure on the financial capacity. And the second situation is thanks to the cloud-based system, many costs in operating expenses have efficiently reduced, leading to the operating expenses reduction. So turning to the second time period, we also have the second anomaly. So from 2020 to 2022, R&D increased marginally while operating expenses rose significantly. So to explain the issues, we divided into two situations. The first one is the impact of the pandemic and the post-pandemic, the recovery phase. And the second one is the economic condition at that time. And in these situations is the inflation. So as we can see in the second chart provided by Statista, we can see that from 2020 to 2022, the inflation rate shot dramatically, so and leading to an increase in several factors. So to adapt with this economic environment, Accenture might have to spend more to balance with the economic environment. In 2013, Accenture reduced its operating expenses to invest more in R&D, which initially improved net income. However, from 2016 to 2017, profits dropped sharply due to rising in R&D expenses, especially for AI and global uncertainty caused by pressures which leading to Accenture's sectors were negatively impacted and leading to profit reduction. However, later on R&D investments started to deliver returns leading to net income growth. And the task 4 correlation and causal.
In Task 4, we analyze how R&D investment correlates with Accenture's revenues, operating expenses, and net profit from 2010 to 2024. The analysis employs correlation matrix, scatter plot, and simple linear regression to review trends and potential causal relationship. The table below shows the correlation coefficient between R&D spending and three key firm-level variables. All correlations are above 0.97, indicating very strong positive relationship. In this slide, we have the regression model of R&D and revenue. We have three important numbers. The first one is intercept. It shows that if R&D spending was zero, the model predicts that Accenture would still generate about 1.95 billion in revenue. It acts as a baseline value of revenue before considering any R&D input. The second one is slope. It's very important that each additional 1 billion Accenture spent on R&D, the model estimate revenue will increase by about 49.21 billion. It proves that R&D investment is highly productive and generating sales more likely through new service, technology, or market differentiation powered by innovation. The last one is R square. It shows that 94.6% of variation in revenue over the years can be statistically explained by change in R&D spending. Therefore, R&D spending is a very strong predictor of revenue growth, at least historically. In conclusion, Task 1 theorized AI adoption boosts revenue through faster time to market, higher productivity, and better customer responsiveness. And the second one, Accenture 3 billion AI investment in 2020 and 2024 generate new bookings supporting this theory. However, the model revenue growth from 2023 indicate a loss between AI investment and financial realization, confirming the theoretical causal link between operating expense and R&D spending. We also come up with three important numbers to show a link between the number increase in R&D also increase the operating expense. This strong relationship aligns with Task 1 theory that ensure AI adoption increase operating costs due to upfront expenditure in infrastructure, training, and integration. Uh, However, Accenture rising OPEC post 2023 supported expectation. As observed in Task 1, costs began stabilizing in 2024 through model reuse and efficiency gains, indicating a non-linear trend despite the consistent upward regression. The regression model of R&D and net profits also proved that the increase in R&D also boosts the bottom line profit, and its emphasized innovation key strategic growth in essential performance. It also supports Task 1 expectation that AI adoption eventually enhance profitability. Contrary to initial project of short-term dip, Essential slight profit rise in 2024 indicate earlier than expected efficiency gains from AI, and the regression align with theory but highlight a quicker realization of benefit. For the limitation of this analysis, we believe that we have three main limitations. The first one is the proxy limitation because we use R&D as a stand-in for AI adoption. The second one is the data scope. We collect annual data only. I think that we better use quarterly or like internal KPI as a variable. And the third one, we know that we have external market factor that can impact directly to revenue, OPEX, or profit independent of AI. So the solution I have already mentioned in the slide.
My name is Hoa, and here's the last part of our presentation. Based on previous analysis, I want to give some recommendation for Accenture. First is to adopt sustainable AI. According to historical data, there has been cost spikes in 2013 and 2023 due to significant investment of R&D. This expenditure also include AI transformation. In reality, AI investment is the driver to environmental degradation, and training AI model can be costly both financially and environmentally. The more we invest in AI, the more e-waste will increase in the future. Therefore, gradually invest in sustainable AI can prevent cost spikes and stabilize operational expenses. It can also be in energy saving and mitigate environmental footprints. Here are some algorithms used to create sustainable AI. And Amazon has successfully applied this method to create Amazon SegMaker, which is the machine learning platform. It enhances eco-friendliness while still provide customer experiences and has the ability to create fresh model in just a week. Enable ongoing innovation in waste reduction methods. The second recommendation that I want to give Accenture is the prioritize cases with high ROI and rapid deployment. Putting this session into the priority metric, I infer that this method is a quick win, which it doesn't require much effort but is still effective. In another word, this method is a high probability of profitability and have the operational expenses stabilized. This method can reduce the risk of failure at early stage of investing AI. Firstly, fast deployment can reduce time to market, and company can see results soon after deploy these methods. They can also capitalize on new opportunities and optimize all the resources. This method can also increase customer satisfaction, leads to companies' highest profit. Secondly, prioritize cases that have high ROI can be a practice proof to justify for future expenditure towards AI. Therefore, in the future, they can invest the same amount of money in R&D, but more in AI and less in other factors. So the key takeaway for Accenture is that if successfully, the company will apply sustainable practices, which will be beneficial for the revenue plus the operational tasks, and the company will optimize all the resources that they have already has to stabilize their revenue stream. That is the end of our presentation. Here is the reference list.